Okay, so good evening, everybody. Welcome to Fulbright. I am certainly like a long way not the main event here tonight, so I'm not going to speak very long. My name is James Collis. I'm a lawyer, a partner here in the banking team. I'm also ex-Be Social boy. And I have unashamed affiliations in the social sense, and I'm also a former radical parent. So thankfully, the fees ended a couple of years ago. So anyway, tonight we have an amazing cast of speakers here. The evening will with me introducing each of them. There's going to be a Q&A once each of them has spoken. So obviously, please do ask questions when we get back to it. And then after that, as Caroline wanted to say again, later everybody's going to break up into rooms, and you'll be encouraged to move around between the rooms to have a more close quarters conversation, if you like, with each of the speakers. So I hope you find the evening useful. Please do enjoy the refreshments as well. They'll be there all evening, and yeah, enjoy it. I won't delay any more, other than say I think Caroline was inspired to choose this week to focus on fintechs, given what's been going on 40 miles away at Bletchley Park. I think we couldn't have chosen a more apposite time to have this evening. So you know, with Elon Musk 40 miles away, that's not bad. Anyway, I will shut up. Peter, I'm not going to introduce you any more than say this is Peter Bunny. Peter is a professor at King's College London, and I won't say any more because Peter's going to introduce himself.
Thank you, James. Good evening, everybody. As James said, I'm a professor at King's College London. I'm a computer scientist. My research has been in series in artificial intelligence and in distributed ledgers and cryptocurrencies. For about 5 or 6 years, I've been a consultant to this law firm, Norton Fulbright, and I have learnt an incredible amount about the law. I would say that lawyers and programmers have a lot in common. We are both communities are very detail oriented, so we like crossing T's and dotting I's, and it's an honour and it's a challenge to talk to you about, in a very short time, to talk to you about fintech. So fintech is just technology in finance. It's a fancy new word for lots of startups and lots of initiatives in older companies, but it's been around a while. The first automatic teller machine, I think probably everyone in the room has used an ATM. The first one was installed in North London in 1967. So we've had ATMs for a while. If you've used your phone to do any banking, you are using a fintech service, using financial technology to look at your balance or to make or receive payments. Even if you're old-fashioned, my mother would be someone like this, who thinks that we should still go into the bank to keep those nice people in their jobs and ask what her balance is, or to make payments or to get money. The person behind the counter, the teller, will be accessing a database. And some of those databases, until social media came along, those databases were among the biggest and most complex that humans have created, at least in the commercial world. Technology is pervasive in the financial world. So in banking, in payments, if you use a card to make a payment, you're using technology to make a payment in the store. In other parts of finance, in private equity, and even in the part of finance which is the slowest, has always been and is still the slowest to adopt new technologies, otherwise known as insurance. Even in insurance, we have a branch called InsurTech, where people are trying out new technologies or deploying new technologies. If you have a car, or some of you won't have cars, if you have a musical instrument and you want to insure the musical instrument, you can go online and get an instant quote for a particular musical instrument. That's using some tech. With cars, you can now get devices that you put in your car, and you only pay insurance for when you drive the vehicle, and You pay according to the amount you pay will depend on the type of road you drive over, the distance you travel, and usually the speed you go at. So you might pay less overall because you're not paying for the times you're not using the car. So these are examples of tech in financial sector. It's pervasive. It's become the way in which startups or new companies challenge the incumbents. They often use tech as the way to challenge. And I just ask, show of hands, how many have heard of Bitcoin? Good. I thought people might not have heard of Bitcoin. Bitcoin and Ethereum and the other cryptocurrencies are an example of growing fintech applications. There are people with large holdings of these currencies. Until last year, those holdings were worth a lot. They're worth less at the moment, although prices have been going up a bit. If you have a large holding, what's the worst thing that can happen is that someone might steal some of your Bitcoin or some of your Ethereum. So people who have large holdings are in the market for secure storage. Financial sector has seen the opportunities here. So we have banks like Standard Chartered Bank and the Canadian bank Northern Trust who got together to offer secure custody. They'll look after your Bitcoin for you for a fee, or your ETH, Ethereum currency, for a fee. So those are established companies offering services to people with cryptocurrency holdings and other digital assets, other types of digital assets. If you have a large holding, even if you have it in secure custody with a big bank, you might want to insure it against being stolen or keys being stolen, keys being lost. So insurers, companies like Marsh, have gone in, as a broker, have gone into the business of providing insurance for cryptocurrency for digital holdings, for digital assets. As it happens that there are 3 cities in the world, 2.5 cities in the world, which are the places to be for this growing business of financial cryptocurrency finance. London, New York, Singapore. Singapore's the half. It's not as strong as London or New York. What surprises me is it's not Silicon Valley. Silicon Valley is not a player in any of this market. And that's because Silicon Valley doesn't have the finance sector. London and New York have the finance sector, and they have driven this. There are lots of careers in that area. You don't even have to own any cryptocurrency to make money from it. If you're a lawyer, for example, lawyers can make money. And if prices go down and companies crash, as Exchange did last year, they go bankrupt, then there are generally liquidation proceedings, there are court cases, there are opportunities for lawyers in every respect here. So legal careers are ones that will build on in the financial fintech world. So I think that I'm within my time limit. Apparently, yes. So I hand back to you, James.
Great, thank you very much, Peter. That's very helpful in setting the scene. So our next speaker is Alan Bassman. Alan is the founder and the managing partner of Digital Horizon. He also happens to be a resident of Paris, and Digital Horizon is a venture investment company. And with that, I will be quiet and hand over to Alan.
So I run a venture capital firm. Venture capital firm that invests in all those wonderful things I just mentioned, which are called fintechs. And what our job is to try and see what will be the next Bitcoin, what will be the next ATM, the next 10 years, trying to put some money and support those entrepreneurs in building those companies. Now, doing that, you have to start focusing what is the current state of affairs, what are the trends in the market, and what is still broken. So I think it was mentioned insurance. To a certain extent, insurance is still the most difficult sector, which you will be able to invest in. But there are much easier sectors which are quite disrupted and fully digital, like payments right now. So our job, daily job, looking probably a day, 10 to 20 companies, analyzing them, thinking, is this the one which is going to become the next PayPal, the next Stripe, the next Kraken, for example, in blockchain space, or not? It's a little bit of a roller coaster because the success rate is 20% on average if you're a great VC firm. So this is really, a lot of people say this, we call it the power law. That means 1 or 2 investments make the entire fund. Some people refer it to almost gambling to a certain extent. What is required? how do you work? What do you do in venture fund? And what's interesting? One is you need to understand your vertical. When we call vertical, it's finance. For us, everything in finance is digital, and fintech is everything. Why? There's no physical product. When you talk about finance, the physical money is irrelevant. Everything is electronic. So unlike others, when you got logistics, you got health, you still got a lot in the offline world. In finance, there is no offline world. Everything is really online. Physical money is relevant. And that means from day one, when you are easiest one is the payments, to credit, to insurance, to any type of financial transaction which requires compliance. That's the big thing. Anti-money laundering, risk, everything there is digital. So it is quite broad. So when you look at it as a venture fund, you will have to segregate where do you focus on the B2C sector, which means that you invest in consumer apps, like you see the digital banks every day, more in the B2B sector, the one that serves other companies. It's investment technology, it's risk technology. Almost do you focus on insurance, disruptors in insurance tech, payments, within payments with entire another area, cross-border, stable coins, simpler payments, payments with credit. There's enormous amounts within each one. To leave you with how do you actually, I was talking about career, how do you actually get to a venture fund? Traditionally, you would work probably at least 1 or 2 years in an investment bank or in a management consulting firm. So my background is both management consulting and investment banking. And you will join 2 to 4 years, up to 2 years in venture fund as an associate. And the main job as an associate is analyzing those decks and speaking to the founders and bringing actual businesses of interest to the partners. It's changing a bit. And now, for example, we've got a couple of interns working directly straight out of university with us as the industry grows. But that's your traditional path.
Great. Thank you very much, Alan. So next up, we have Hugo Thor. Hugo is the Fintech Payment Services and InsurTech team leader at Protean Risk. Hugo also, unlike some of us, left Bradley this century. Protean Risk is a specialist insurance broker accredited at the Lloyd's insurance market. Hugo.
Thank you. So good evening, everybody. I'm Hugo. I'm the second Hugo in this room. See Mr. Zeal over there, who works very closely with me. And we don't just hire from Bradley, I promise. Protean actually formed part of Howden. So Howden are a global insurance brokerage, which the CEO is David Howden and an ex-Bradley. And I think he tries to keep that quite quiet. As I think he may have left Bradley before he was meant to in his upper sixth, I think. So, but what do I do? So majority of my time I place insurance for fintechs and payment services, and now we're in a sort of early stage with our InsurTech solution as well, and digital assets and crypto. So Marsh aren't the only broker doing that. In our space, which is good for a bit of competitiveness. So what we look at in our business is the operational risk of fintechs and insurtechs. So when you think about a company, you think about the people, the tech, and the funds and any other type of cyber risk as well. We try and knit that all together in one insurance solution, which we sort of term operational risk. So that's professional indemnity, D&O, crime, and cyber. We have a homogenous solution that we place in the Lloyd's of London market, and then clearly with the likes of Liam, who are sort of headquartered in Singapore, there's foreign and international scope and need for insurance capital overseas and in the Asian territories and Middle East as well. So we globalise that solution, and that's our job, to try and find and unlock insurance capital in those sectors. Clearly, the fintech sector, compared to traditional financial institutions, is an emerging sector. So a lot of apprehension around new technologies, especially with the advent of AI and how quickly that's scaling. You know, the insurance market is apprehensive, it's risk averse, but in the Lloyd's of London market, you know, they are innovative. They, you know, as an industry, try to insure things that have not been insured before. So that is something that when I first started entering the insurance market, I was very keen to work with those like-minded people and try and unlock solutions where they haven't been before. It's a very social industry. That doesn't mean just drinking, I promise. Even though that sometimes helps. So I don't drink anymore, but not because of my industry sector. Why am I saying that? Ultimately, it's definitely a good sector to be in if you're thinking about it post Radley. You know, ultimately, our company not only looks at insurance advisory solutions, but we're actually starting to invest into fintechs and insurtechs as well. So we have a venture fund within our company too. So we're trying to provide insurance advisory solution, but then capital advisory as well. Very happy to meet anybody after this briefing. Thank you for the time.
Excellent. Thank you very much, Hugo. I'm now going to introduce another old Radleyan, Sigurd Wenden. Sigurd is a distinguished former rower and former banker who has now moved into the world of private credit with the firm Levenue, where he is head of business development.
Great, yeah, thank you, James. Welcome everybody, thank you, good evening. I'm Sigurd, although some of you here might know me by Robbie, which is already a contentious issue tonight, but we'll get with Sigurd. Yeah, I lead the BD team at Levenue, which is a fintech. We're a private credit marketplace, specializing in revenue-based financing. So what the hell does that even mean? We are the eBay of alternative financing for companies. So say you have a company like Netflix that has a recurring revenue stream from their subscribers, they would be able to trade the future value of those subscriptions and the revenue that they would generate from them through our platform to investors in order to receive upfront capital, which they can then go and use to finance, say, a new film or TV show without having to sell a piece of their company to someone like Alan, which in some cases works, but in other cases, especially with high growth, successful established startups, they would like to keep as much of that ownership as possible for the team and for the founders. So they would trade that through our platform, and the way in which we analyze that is through a proprietary data-driven algorithm and risk underwriting engines. So we work closely. We actually just acquired an insurtech company to help enhance those systems, and we then provide them with a trading limit and allow them to trade up to that amount of subscriptions. On the other side of the marketplace, it's sort of unlike, you know, Kevin buying a kettle on eBay. It would be an asset manager or a family office or a hedge fund looking to diversify their portfolio into this sort of alternate space with a particular focus in private credit. So they will purchase that revenue stream, say from Netflix, at, you know, a slight discount to its future value. So they might pay Netflix £9 million for the value of £10 million in 12 months. They will then receive monthly repayment on that amount, and Netflix receives their capital upfront to go and finance their TV show, their movie, whatever. And the investor receives the £1 million profit difference between the 9 and the 10. So what do? My team and I, we focus really on the investor side of the business, as given that the company side is the advantages are pretty self-evident in that you don't have to give up ownership of your company, and the costs are usually a lot cheaper than going to a traditional financier like a bank who might not know how to price it or have the data available to accurately price it. So really our biggest focus is on getting investors globally onto the platform and managing those investors with their trades and future trades, and then making sure that sort of everything is okay there and bringing in new capital as we go. So yeah, that's a brief overview.
Great, thank you very much, Sigurd. And last but by no means least, I'd like to introduce Spencer Hanlon. Not only is Spencer a Radley parent, he's also the global head of travel payments at Neom. Neom is a leading actor in the very important area of money movement, which, as many of you may know, is a very complex business that is key to global commerce. So Spencer's going to speak a bit, but also what he's also going to do at the end is he's going to chair a Q&A, which will involve the speakers as well. Spencer.
Great. Thank you very much. First of all, thank you. Thank you for being invited. Thank you for being included. I'm not an ex-Bradley boy. I was an extra-Burnian. George, in the second row is my son, and just left Radley. And it's thanks to events like this that he's enjoying some of his career opportunities at UBS. So thank you, Caroline, and thank you for the school. So I'm going to do three things very quickly in 5 minutes. You can tell this is a school-related thing. Everyone's very strict on the timings. So I can do the three things. One, I'm going to tell you just a little bit about myself. So my background is travel. Out of Sherborne, I went to Newcastle, then I joined the British Airways graduate scheme. At the time, 180 graduates. I did a bit of finance, realized I'm not a finance guy, and moved overseas into commercial roles. Did a decade there, some fascinating experiences. I was in Tel Aviv during the Second Gulf War, so living through some of the stuff that's going on now, and that was, I think that was a big learning experience. Then 2 decades at Lufthansa, where I moved from pure airline more into travel payments. I ran a company that does a corporate credit card product there. Out of there, during just pre-pandemic, my timing was fortuitous, got out just before the pandemic. I moved into being non-executive chair of a travel payments company called Exaris. Exaris is 20 years old, and then went into the pandemic fully exposed to leisure travel. So it was an interesting time, and again, a great learning experience. I say all of this just as a little bit of career context. I was given 3 weeks to sell the company, or we were going to close it down. And I did this in my attic, just dialing for dollars. Anyway, fortunate enough to find Neom. Neom is a rocket ship of a fintech. I say most of this for Alan's benefit, because he's a venture capitalist. So but a rocket ship of a fintech out of Singapore. It's a small community. I met James, who is our banker at Barclays, and Hugo insures us. So as you can tell, it's quite a small community, and we're just over the river by Cannon Street. But what we do is we move money across borders, cross-border payments. And I'll try and explain it in 30 seconds or less. There are 4 key components of that. One, it's a licensed business. You can only play in this game if you have a license, and then you have to look after that license like a golden egg. So that means actually a large portion of the people that work for us are not financiers, are not bankers, are not technologists. They're lawyers, people who understand compliance and how to deal with a regulator. It's the ticket to ride, and it's the barrier to entry. So that if you can do that well, you can compete. Secondly, we use technology to connect those licenses. So we have technology in Singapore, we have technology here in Europe, and essentially people give us money, and through the computer, bits and bytes move in a nanosecond, and money that was in London is now in Singapore or Jakarta or Hong Kong. That's the easy part. So that's the second one. The third asset is credit cards. So it doesn't always make sense to pay another business into their bank account. Sometimes it makes better sense to pay by a credit card. Travel is a perfect example of that, and that's where I'm mostly focused because of my background. You are buying in travel a good that you might consume in 6, 9, 12 months' time, and that hotel might not be there. There might be another pandemic. Credit card gives you the ability to get it back. And the fourth asset, and again coming back to James, who works at Barclays, ex-Radley, is our banking relationships. The money that we move always starts in a bank account and ends up in a bank account. So the stronger banking relationships you can have, the better you can compete. And what that means is I have to stay center lane. There's a lot of money to be made if you get out of center lane. So if you go into gambling, gaming, adult, alcohol, brokerage, if you stay center lane, you have longevity, but you can make more money outside, but the banks are more hesitant in dealing with you. And that's what we do. We just yesterday celebrated 100 million, and valued at 2 billion. When I joined, we were valued at 400 million. So that's the roller coaster you're on. If I have a few more seconds, my advice vis-a-vis careers is don't box yourself in when you're looking at something like fintech to say, I've got to be interested in finance or I've got to be interested in technology. It's not the case. There's so many other bits that make it a success. The other thing is come in and be prepared for chaos. We're not mature. We're 7 years old. We're making it up as we go along. Now, we're trying to be as intelligent and clever and thoughtful about it, but you move at a pace and a globality. I'll give you an example. We founded in Singapore, but we moved our headquarters to San Francisco because it's easier to raise money and we want to go to IPO, and being based in the US makes sense. That was a stupid idea because and then if you have people in Europe, no one's in the same time zone. So it's just a logistical nightmare. We're 24 hours a day, the emails go around the globe before you get an answer. Those sort of things you learn as you go along, but you just got to learn it and move on. If you want a more structured institutional learning, then go and work for a bigger organization earlier on in your career. And at that point, I think I'll shut up and move to Q&A. So we have some microphones. We would love questions from the audience, please. Now, there is a format that Caroline's going to explain after this, where we're going to move into rooms, so you can have more of an intimate conversation with us, should you wish. But if there are any questions in the room to any of the panelists.
It would be useful way for that.
Good evening. So I'm going to ask bring up the annoying topic that everyone can't stop talking about, which is Gen AI. And sorry, I'm sure you're hoping for a few minutes of not talking about it. I'm very interested in finance in the B2C aspects of finance, because I think finance scares a lot of people. I think those of us who work in finance find it very interesting and exciting, and those who don't find it terrifying and don't really want to talk about it. So I think Gen AI, I'm going to have to formulate where we land on it, offers a really interesting opportunity of turning that around and providing opportunities in the B2C world of finance that we haven't seen yet, because we've seen the machine learnings, all that data insight that we're getting, that's been around for a number of years now. So I think this Gen AI aspect brings something very new. So I suppose my question to the panel would be, where do you see the opportunities in that? Where have you seen interesting growth, or where are there holes that you reckon are going to be filled soon?
But it's a good question. Thank you. For those who don't know, B2C is business to consumer. So this is services to us ordinary folks. In the last 12 months, 11 months, we've seen the release of a new type of AI, personified by something called ChatGPT. Most of you may have seen this or used it. And what this type of AI is, it's been trained on as much of the data that's publicly available that they could get hold of, that the companies involved could get hold of. And what it's trained to do is it's trained to predict the next word in a sentence, or the next sentence in a paragraph, or the next paragraph in a longer piece of writing. And it turns out it's can be very accurate. And secondly, it's able to engage with human engage in human interactions in a way that's very convincing to the humans. And the human thinks they're talking to another human, and in fact, they're talking to a machine. And this, I would say, amongst computer scientists, the success of this is very surprising. It's not what we would have thought. It's been proven in the release of these models and how successful they are. Having said that, they have lots of vulnerabilities and lots of weaknesses, and they are not by any means perfect. Associated with the surprise of this is the surprise that if you take one of these large language models and you combine it with some of your own private data, you also can have a successful interaction, but you have the conversational abilities of the large language model, the ChatGPT, with the factual information that's in your own private data. So you could have a company that's, we were talking about travel, so an airline might have a customer service function, and people call up with questions or with queries. Then the question might be, what's my entitlement to a refund if the plane was delayed? And that's going to depend on how long it was delayed, which part of the world was involved, and so on. So there's a factual question from the customer. which will have a factual answer based on the policies of the airline. And the system can, an appropriate system can look in the data of the company, the policy documents, and work out what the factual answer to the factual question is. That you then combine it with the large language model so that this factual answer is given in a nice conversational tone, and the customer can interact as if they're talking to a human, and they can ask questions and the system can respond in a way that seems human-like. So people see an enormous opportunity in this combination of these large language models with private silos, private databases of information that belong to companies or to organizations. And nobody at all really knows how to do this. The tech companies are busy trying to learn. Microsoft and Google and Amazon, IBM are busy trying to learn how to do it. And they've been busy trying to sign up their big customers to do prototypes to understand this process. If you're looking for careers, this is not a fintech career, but there's a career in what's called prompt engineering. It feels to me exactly like 1993, 94, when the big thing was the World Wide Web, and nobody knew how to build a web page. And you could command very high salaries if you knew how to build a web page. The same thing is happening right now with prompt engineering. So I've diverged away from your question, but I think there's an opportunity to provide services that can help overcome the fear that ordinary people have with regard to finances. Or many ordinary people have. Sorry,
No, not at all. No, okay. I saw a hand up. Were you just scratching your nose? No, good.
Question for Alan. What do you look for in a business for business studies?
So I think it really depends on the stage of the business. So we're on the early stage fund, the late stage fund. The progression is very simple. When you look at an early stage, the earlier it is, the more you look at the team, because there's nothing else really there to look. The ideas are great, but as we say in our business ideas, the cheap execution is everything. And they're probably 70 to 80% what we look at is the team, and 20-30% we look at the actual idea, technology, everything, because nothing. As the company progresses, so we start investing in the later stages and going all the way to the wonderful 2 billion cross-border payments business, it becomes purely financial. So where in the early stage, most of what people look at is quite intangible. It's quite believe in the future trend, people-centric. When we come to the 2 billion multi-unicorns, it's mostly a financial job. You're very similar to a private equity analyst, but you're focused on different measures. So where the private equity traditionally or bank will focus on EBITDA, will focus more on growth figures. Whereas they will focus on profitability, we'll focus on something we call unit economics. That means that each, at least, transaction is profitable. Doesn't mean the entire business needs to be for us. So we use different measures, but they are financial measures, and we use people measures. Let's call it that. The other one is there are two different types of funds. Ones that are extremely people-centric. Basically, what they say, we really don't care if this person built businesses before, they're likely to build it again, and we will invest in this person. And the part which are more business-centric or trend-centric like we are, we still, for example, take blockchain, that's an application where we think and around the B2B and stablecoin technology and the infrastructural part of the blockchain, which we think in the future, and we'll put what we call 10, 20 bits in this trend. And we will look at AI, and if we think that chatbot is finally going to become a chatbot and not a completely useless tool with the AI, and we will put bits into that. Then we'll take another one. I'll give you a bit of a 2-3 in our flavor. We believe that AI will revolutionize research in the B2B side because research is extremely manual right now. It's all done by extremely very people, and you have what's called a digital twin technology where you can twin them if you train on this. So we will put into this kind of AI-based research tools another 5 to 10 bids. Some of those bids which are already played around were the digital banking. Digital banking clearly is not something that you put new bids on, and you will more capitalize kind of in the mid. So you will look at the different markets. That's they call the copycat models. Copycat models will be just how we relate. We know that, for example, whether you like Revolut or not, it's incredibly how fast it was built, how fast it's grown, and technology which is there. You might not like Nubank on this, but it's the most dominant bank in the digital bank in Brazil. Which other countries do you know which are quite big? This is simplicity. Indonesia, 270 million people, still no digital payments, no major still. We will look at it, we'll look primarily, we understand the business model, and now we need the team. These guys are ex-where? They're not, but the ones to invest in. They could be ex-Apple Payments, they could be ex-Revolut, they could be ex-Nubank. They're building exactly the same thing. And have to be extremely genius. Venture capital is likely to be a good bid. That's how we look at it in different stages.
Thank you. Excellent question. If you get a group of founders together, 90% of the conversation is about how do they deal with fundraising. Because it's a huge part of your success in terms of finding the right people to invest and how you pitch it. Anybody else? Yeah.
Hi, thank you very much for the really informative discussion. A more general question, I guess, about the state of fintech in the UK. A hypothetical question, maybe. If you were to start a fintech company anywhere in the world today, where would be the best place to do it with the considerations of regulation, funding, etc.?
I can have a stab and then please chime in, anyone. I don't think there's necessarily a best place, right? We started, the Neum story started with somebody who was working in India at the time and was frustrated that he couldn't pay for his stag weekend on the Gold Coast. So he couldn't send money from his private bank account in India to someone in Australia who wasn't on Airbnb. And then eventually he ended up, his friend who's in Australia paid the Airbnb and he paid him. And he got him to thinking there must be a better way. In fact, apparently the story goes that he was terribly on the stag weekend because he was just thinking about his business. Right? But and then he created the basically Southeast Asian version of Wise, then he pivoted, and then he created Neum, cross-border payments for B2B. I don't think there was any dropping of a pin and saying this is the best place for me. I think here in London, obviously, you have a lot more financial capabilities. Out in San Francisco, you have a lot more access to money in terms of the venture capital. I think in Southeast Asia, you have a very underserved market. Africa, anyone who can solve that and stay out of jail, fantastic. Latin America is brutal. So I don't think there is any one single answer. Anybody?
I'll try and give my very general view on this from an insurance perspective, but UK, London has clearly got a specialism in terms of the amount of funding you have, your banking partners, the location, the multicultural feel, clearly the population. So there's a market service here, but then obviously there's a market service across the world. But having proximity to your regulator, to your banking partners, makes that a lot easier, presumably when you're trying to start a business. So that's why I say the UK has, and particularly London, has had obviously a very successful model. But as Spencer was saying, that's easy to replicate in other, I suppose, more advanced societies. But clearly, there's a need to bank the unbanked. But look at other foreign territories where people need access to money that clearly they don't have because they're having to walk thousands of miles, or sorry, not thousands of miles, but hundreds of miles on a weekend. And I think that point around the concept and the idea behind the vision. So one of our companies, who's Estonian, CEO of this business, couldn't get a credit score in the UK when his family came over, and that's why he started his business. And now I think they're Series D of funding. So it's just the idea behind the concept, and I think probably a lot of luck has a part to play in the success of these businesses. I'm not sure how many firms of yours, Alan, have either become insolvent or, unfortunately not set out what they intended to do so, but clearly that has parts to play.
Yeah, I think from the investment perspective, I think everybody's really on Southeast Asia and India right now. That is the future is. And why? I think big population, relatively simple technology still from what we know of traditional fintechs, payments, cards, apps, still a lot of way to go. So that's kind of an easy kind of easier thing to imagine. I think what's extremely important will be the crypto regulation, the way it's going, because once you will have such, that's why London, I think, is a great place for this if we get our regulatory right, because the technology, the infrastructure technology of blockchain is far superior in correspondent banking, in trying today trade finance transaction into smart contracts, far superior from security than what we're using right now, but it lacks the regulatory framework to go really big outside of the Shiba coin, which we love, and the Sushi coin. All of these guys are great, but the other one where I think London, and we invest fintech mostly in London, and our B2B SaaS or deeper tech is in Tel Aviv, is because London has got this combination of great financial skills and engineering skills which come all over the world. And engineering skills come a lot, mostly from Eastern Europe here. So we don't find as many. There's some Asia, but mostly great engineering skills come in there on all kinds of places from Eastern Europe. And that is why I think it's still a great hub to build fintech.
Yep, absolutely. One more?
Yeah.
I was giving evil eyes by Caroline.
Oh, such a fun.
If we look back sort of 50 years at finance, it was very much relationship driven. Whereas if we look today, it's a hybrid between systems, information. I want to send money to my friend, I've got Monzo. Where's this place going in the next 30 years?
I can answer that. I don't think anywhere. I think relationships will still always be core to literally any business, but I think especially finance and when you're dealing with people get very peculiar. But I think to your point, there are going to be advances in the systems that we have and the efficiencies and the effectiveness of them to improve and speed up and make more accurate whatever it is that you're doing. But, I find that, we're a tech first fintech. All of our sort of IP is in the technology that we have and how we analyze companies and mitigate the risk to investors. But the vast majority of my job is going into a meeting room and speaking to an investor and trying to convince him and show him what it is that we have and why he should be trading on our platform versus someone else. So I think that human to human interaction has been, as you alluded to, the last 50 years, very important to the world of finance and business writ large. But moving forward, I don't think it's going anywhere. And I think that's a complacency that some people make when they think, especially post-COVID, being able to jump on a Zoom call and get a meeting done. Being in the office, having a team around you, engaging with people, interacting with clients, meeting people at events like this, how much more valuable is it being in person than if this was just, a podcast or a webinar, as we were sort of discussing earlier. So yeah, I don't think it's going anywhere. I think the systems will improve it, but the core will remain.
Cool. Thank you very much. I'm just going to hand back to Caroline to take us through the next part of the evening. But before I do, just thank my fellow panelists. Thank you for all your time and your engagement. It's not hard to invite us to come up here and talk about our favourite subject ourselves and what we do. It's going to be easy. Hard bit is keeping it in 5 minutes. Seriously, and well done everybody for coming along. Now the exciting part comes where you can come and have more one-to-one conversations. And my only bit of advice to you would be ask more how questions than what. How can you help me? How can I do this? How can I find out more? Because that's where you're going to get more out of this conversation. So don't be shy, do ask, and I'm sure I will. I'm sure my fellow panelists will be happy to help you.
Great, thank you. Well, a round of applause. Great, thank you. Well, a round of applause for our panelists and also for James, who's hosted in this wonderful venue as well. Without volunteers like these, we can't run events like this. They're busy people, so we're really lucky that they gave us their time. So please, big round of applause. So just a final wrap up for me. I'm going to be very quick. I'm Caroline Monaghan and I manage the Radley Society. I'm responsible for cultivating the Radley network, putting together things like this to do that. I have a strong focus on helping Radleyans in their early career of exploration through networking opportunities, mentoring and advice from the community. So thanks to the members of the community that have come here tonight. That makes a massive difference to us in this weather as well. So our 2023 RadSoc Business Networking Programme focused on the theme of technological innovation. As we move into 2024, we're really interested in what themes that you want to hear about and what you want to network about in 2024. So we know we're going to do one on the creative industries, which is something a bit different. We haven't done that before. Other themes that coming out tonight, investment sounds like quite a good one to maybe focus on. We'll get Alan back. Private equity, engineering and aerodynamics are other areas that have come up. But if you've got any ideas, please come and talk to me just briefly and say this is what we should be networking on. And if you want to speak, even better. So just a reminder that tonight is about building connections. That's really important. And to help you continue the connections afterwards, a reminder that we have Radley Connect, our networking platform. Grab one of these off the desk. It's got a QR code on the back. If you jump on Radley Connect, then it makes it really easy for people to network with you because you can say exactly how you're willing to help. So the other thing I wanted to say is follow us on Instagram because the real pulse of the Radley network is on there. So you can see what is happening in the business community around, as well as things more broadly from Radley. Now, not only do we want to encourage all Radleyans and Radley parents to network who are here tonight, but we also really want to encourage boys who are starting to learn these skills. We've got about 18 boys from Radley tonight, I think, and they've all shown an interest in the fintech sector by being here. They really want to talk to you. They may have researched you. Some of them may even have contacted you beforehand. You might possibly be a bit intimidating. I don't know. Don't know how confident they're feeling. I hope they are. But please go up to them as well as them coming up to you. And boys, go up to everyone here because they're here to help. Now, this is the point to listen very carefully because I'm going to say this once. It's quite complex. We're going to do group networking now. So you should have been given a number on arrival from 1 through to 5. If you haven't got a number, then please go and get one from Henry at the back there. You're all going to walk out of there. Rooms 1 to 4 are that way, and room 5 is over there. The speakers are all going to go into a room, and you go into the room, the number that you have, that room, and then we're going to rotate you round clockwise. The speakers round clockwise. I'm not explaining this very well at all. Basically, you go into that room and you stay there, and the speakers are going to move. So if you haven't got a number, that's awesome. It's going to be quite hard and fast. We're going to move around sort of every 5, 6, 7 minutes because there's quite a lot of speakers. And then it's just open networking afterwards. So go in there, ask them all the questions that you want to. We'll tell them what you're doing.
And this is room number 1.
This is room number 1, yes. Yeah, 1, 2, 3, 4, 5. Right. Thank you very much for coming and good network speakers. Thank you.